Hey everyone, Nick here doing the homework on Monday night. Happy New Year. Hopefully, we all had a good, long, relaxing weekend, and may we all have a prosperous 2024 and a happy one at that. So, we will start with a plan for this week. First, I'm going to state a couple of facts, and then whatever catalyst we may have, and then what to focus on. So, keep in mind the fact is the DIA, the Dow, is in breakout mode, all time high, no questions asked. And the fact is that the SPY is trying to do the same. I'll show you the visual, which is the S&P. They're trying to do the same. We are back to the exuberance of 2021, which is the pandemic, bottom left. Boom, 2021, extreme bullishness. This bullishness is not on the back of froth. Back then was frothy, crappy stocks. Now it's on the back of things like Nvidia and Microsoft, which are not crap, regardless of how high they are. And to give you a visual on that, let's go to the QQQ, which represents the NASDAQ. Check this out. I just did the scribble. This is the bottom of the bottom of October 2022, when we call the bottom somewhere in November. We have since established an ascending pattern, these colorful lines, and we have zigzagged and bought the dip inside that pattern. So they overshot, they undershot, they overshot, they undershot. And then this is just reversion to the mean. So if you think it's an extreme move, it's not. It's just an extremely sharp ascending wedge, right? Which leaves us susceptible to dips, of course. But this move is just reverting to the mean. So if a dip comes and it stops over here, they're still in the process of buying dips. So keep that in mind. So if I'm upset with the rally, this visual should tell me that I should respect the trend until it breaks down. So we don't have any sense of that happening right now. So how do I approach this week? I go to the tiebreaker, the IWM. It has been our focus, correct? And look how close they came. Back in the summer of last year, we thought that we would break out to here from the August. They took their time and their distance. They finally got to the target. So while the QQQ did this, right, and they're here right now, the IWM said, no, I think I'll take a detour down to hell and back. So here's what I'll do this week. Since if I focus on the daily back here and zoom in on what just happened in the IWM, an impressive 30% rally in about 60 days. And about 10% of it from this candle to here is from the Fed, the 1213 announcement that the Fed made. So here are the goals for us this week. I scribbled them already, just practicing for this. One, we have had one similar red candle as Friday. This was Friday. This was a few days ago on the 20th, where we had one red day and boom, higher high. We have one red day. Can they make a higher high and get to number one? So that's what I'm looking for. Can they get to number one, which is 210, 208, 208? If not, will they get to number two, which is 196 or lower? This one, zone. And if they do get to number two, by Friday or Monday or Tuesday next week, can they get to number three and break it? Or will number three zone, the 200 zone, 200 to 202, remain resistance and they do this? You understand? So step one this week, can they bounce off of this one red candle like they did off of this red candle on the 20th? That's the question. Now, the small caps is a basket of about 2,000 stocks. Collectively, there are a lot of them, but they all fit inside of Apple, so it doesn't really matter. However, I don't think the S&P can break out and take off without us answering this question. Number one or number two? And if number two, can they get back and beat number three? Simple. So that's the plan this week. So how do I trade this? I don't become harsh shorting because I really don't know if they have the oomph to break out. I want to see. So if I want to lay out bearish bets, I should use bear call spreads, credit call spreads to leave room for error, or buy not so harsh puts or put spreads and then stop out quickly to see what happens. So that's the plan. Very simple. Continue to track the main indices, but focus on what the IWM will do after one red tick. Can they repeat that bounce from the other red tick on the 20th? Or is this going to be a little different? Simple as that. There are a few earnings reports, I believe, but I don't think they're material enough to move the whole market. But if you're interested in the companies, you can look them up and try to trade around that. Until then, I'll keep us updated during the week.